AGCO Stock, ticker symbol AGCO. This stock is up nearly 2% on the year-to-date chart, underperforming the SP500 big time. AGCO missed on both the EPS and revenue. For the upcoming earnings, analysts expect another miss. And people like AGCO for many reasons, one of the three main things being the dividend. It is not the 1% dividend yield, but the 14% growth and 10 consecutive years of dividend increases. If we look at the past 5 years, we see that AGCO beats the S&P 500 by a small amount. So could this be the perfect time to buy AGCO stock? Well, by the end of the video I will give you my 3 price targets, so make sure to stay tuned and see how I'll build up to this price target. And I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So what does AGCO do? AGCO is a major worldwide manufacturer and distributor of agriculture equipment. AGCO offers a full product line including tractors, combines, hay tools, sprayers, forage equipment and implements through more than 3,000 independent dealers and distributors in over 140 countries. Looking at their earnings, we see that net sales came in at 3.8 billion, down 2.5% year over year. However, the full year results were showing almost 14% growth, so this worries me a bit. Gross margin increased 180 bps, which is looking really good. However, it is slightly lower versus the full year results. Operating margin went down 160 bps, which is not looking any good either, especially with the full year results sitting at 180 bps growth. Both US and Europe see a decline in tractors. Combines are growing in both US and Europe. For South America, things look pretty different, with big decreases in both segments. AGCO expects that production in 2024 will decrease roughly 10% versus 2023. To me, this doesn't look any good either. In here we see the operating income and margins one more time. Fourth quarter in 2023 went down big time in margins, but the full year results still look pretty good with decent increases. And with the joint venture of Trimble and AGCO, it is expected that this segment will do 2 billion in 2028, which is an insane growth versus the 750 million right now. For the full year of 2024, AGCO expects that US will go down 10% in unit retail tractor sales, where Western Europe is expected to go down 5 to 10%. South America is also expected to go down 10% in 2024. Main reason is the softening demand. Down the line, this means that it is expected to do 13.6 billion in sales with an EPS of $13.15. In 2023, AGCO did 14.4 billion in revenue and $15.5 in EPS. So that is a heavy decline in both cases. And now that we know a bit more about the company, it is time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analyses every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue by diving into the fundamentals. AGCO is a 9 billion market cap company. PE ratio is at 7.9, indicating they are undervalued. Later in this video I will show you my 3 price targets for AGCO stock, so make sure to watch until the end. Revenue is at 14 billion and in this graph we see that revenue went up in the long run. However, it is not really steady and consistent, and this is very common for a company like AGCO. Margins are going up and down a bit, and after seeing the bottom in 2020, margins started to recover again to pretty high levels. EPS is pretty much the same story as the margins and revenue, nothing really special to add here. Analysts expect that EPS will decrease in the coming years, Especially 2024 is going to be a tough year with minus 17% growth expectations in EPS. For the revenue analysis, also expect 2024 to be a tough year. After that, things start to recover and in 2027 it is expected to see 20% growth again. Return on assets is sitting at 10%, which is a great number. Return on equity looks really good. And the most important number, return on invested capital, is sitting at roughly 15%, which is a great number. It is also higher versus the 5-year average, which is very nice. Current ratio is at 1.46, which is a great number. Nothing that really worries me a lot here. Right now, AGCO has 1.6 billion in debt, and I prefer companies that can pay down at least a big chunk of the total debt with the total cash. AGCO has 6 million in total cash, so they can't pay down a big chunk of their debt. To me, this looks really good. But it is still very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow went up in the long run. It is not really steady and consistent, but I will take it. Shares outstanding are decreasing in the past couple of years, which is something that I really like. When shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at almost 1%, which is a bit of a low number. I would love to see a higher number here, but it is still looking pretty decent. Annual payout is at $1.16 and payout ratio is at only 7%. I prefer 50% or lower, so right now they have 93% left in cash to buy back shares, pay down debt, do acquisitions and all other things. The 5-year growth rate is at 14%, which is a great number. They have increased the dividends for 10 years in a row, which is also pretty impressive. And if you take a look at these numbers, the dividends paid since 2012, you see that AGCO did increase the dividends at a decent pace. We also see some additional payouts. Payout ratio is a very important metric with dividends. It tells you if the dividends are safe. In here we see that historically it looked really good. In this graph we see the expected dividends in 2023, 2024 and 2025. Of course this is an estimation and can be highly impacted by results, but it gives you a rough indication. It is expected to go down a little bit, but this is including the additional payouts. Overall, these dividends look really good to me, but how about the historical returns? I decided to compare AGCO stock with the overall market, in this case the S&P 500. Next to that I added the Deere company. On the 5-year chart we see that AGCO beats the S&P 500 with a small difference. The Deere company had the highest return with 175%. And keep in mind, this is including dividends. On the 1-year chart, things look pretty different with the S&P 500 returning almost 30% while both AGCO and Deere are seeing much lower returns. On the 6-month chart it is pretty much the same story, with the S&P 500 sitting at nearly 20%, while AGCO and Deere are sitting in the low single-digit numbers here. On the 1-month chart it is again AGCO and Deere company that are beating the S&P 500 big time. So bottom line, AGCO was the winner in the long run and the short run versus the S&P 500. So could this be the perfect time to buy AGCO stock? Well, let's check the 3 price targets that I created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth I'm filling in 2, 4 and 6%, based on historical performance, their own outlook, but also because of the analysis. For the profit margin I'm putting in 7, 8 and 9%. For the free cash flow margin I'm putting in lower numbers. For the PE ratio I'm putting in 8, 10 and 12. For the price to free cash flow I'm putting in higher numbers. My desired annual return is 12.5% since I can get an easy 10% average annual return with owning an ETF. Right now AGCO stock is around $124. I hit analyze and we do see a few green numbers. We have a low price target of $73 to $117. We have a mid price target of $112 to $166. And we have a high price target of $167 to $232. To me, the mid price target is the most justified here, telling me that this stock is kinda at the bottom of this range. Which price target do you think is the most justified here? Let me know in the comments down below. My final conclusion on AGCO is that it is an interesting company. This industry has gotten my attention as of lately, and there are some great companies out there. AGCO might be one of them. Most fundamentals look pretty good, and the fact that margins are growing and they can pay down a big chunk of their debt is something that shows they have great management. From a dividend point of view, things also look pretty good. You got a decent yield and low payout ratio with high growth numbers. From a value point of view, things don't look that bad either. I wouldn't mind to see a lower stock price as of right now to build in some margin of safety, but in general I think they are undervalued. For now I'm putting them on my watch list to see what is going to happen on the next earnings and to dive a bit more into the industry. And remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.